SpaceX could become an AI-led revenue company next month. That is Elon's claim, and the numbers behind it are almost impossible to ignore. To be clear, rockets and Starlink are not disappearing. AI takes over means the revenue mix could flip faster than almost anyone expected. In a new address to employees, Musk said AI revenue could exceed all other SpaceX revenue in September, then significantly exceed it during the fourth quarter. He also discussed a far larger ambition, roughly $500 billion of company revenue in 2028. That is a target, not a result. So this episode asks one question. What would have to be true for SpaceX to transform from an aerospace story into an AI economics story? The starting point already moved dramatically. SpaceX reported second quarter revenue of $7.81 billion, up 92% from a year earlier. AI revenue reportedly reached $2.56 billion, up more than threefold from the previous quarter's $818 million. That acceleration explains why Musk's September claim cannot simply be dismissed. One more major infrastructure contract could change the segment ranking very quickly. But revenue is not profit. SpaceX's pre-IPO disclosures showed the AI segment losing $2.47 billion from operations in the first quarter. The same filing showed $7.72 billion of first quarter AI capital spending. Building frontier compute demands chips, power, cooling, land, and constant upgrades. Second quarter reporting placed AI capital spending near $15.8 billion. Even with improving cash-level economics, depreciation and construction still matter enormously. This is the central tension. SpaceX may be selling AI capacity faster than expected, while simultaneously spending at a scale that makes normal valuation tools feel inadequate. Where could the revenue come from? First, dedicated compute agreements that sell capacity directly to large customers under contracts, rather than consumer subscriptions. Second, Grok itself. Subscriptions, enterprise deployments, developer API usage, advertising, and products such as Grok Build that put the model inside real workflows. Third, distribution. SpaceX AI controls Grok, X, infrastructure, and a growing enterprise software layer. Each piece can send demand into the others. Then there is the part no ordinary AI lab owns: launch. Starship, Starlink, laser links, and orbital compute could eventually turn space infrastructure into a cost advantage. That is the bull case in one sentence. SpaceX controls more layers of the stack than almost anyone, from electricity and chips to software and orbit. If those layers reinforce one another, the company could sell intelligence, connectivity, and physical infrastructure as one platform instead of three separate businesses. Now the bear case. A giant contract can create spectacular revenue growth without proving broad demand, durable margins, or a diversified customer base. Hardware ages, chips depreciate, power commitments persist, new models get cheaper, competitors cut prices. A revenue surge can still destroy value if returns stay below capital costs. And the $500 billion ambition is extreme. It implies a quarterly revenue machine larger than many global technology companies' entire annual businesses today. That does not make it impossible. SpaceX has repeatedly scaled systems that looked impossible. But execution history is evidence of capability, not a guarantee of economics. For investors, watch 5 numbers: contracted AI sales, compute utilization, segment operating margin, capital spending, and how much cash comes from customers outside related entities. Also watch Starlink. Its 12 million subscribers and recurring connectivity cash flow remain crucial because they help finance the AI build-out while the new business matures. The September claim is close enough to test. If the next disclosure shows AI revenue overtaking everything else, SpaceX's identity really will have changed. If it misses, the market will ask whether the extraordinary spending arrived before sustainable demand. Either result will matter more than one day's stock move. SpaceX is still a rocket company. It is also becoming an AI infrastructure company at unprecedented speed. The next few months will show which identity drives the valuation. Subscribe to SPCX Investor for the evidence as it arrives. This video is analysis, not financial advice.